In this video, we're going to be covering some technical analysis for a bunch of charts that might be hinting that we're getting some kind of dead cat bounce in the form of a short squeeze. Now, if you are watching this video on, say, Monday night or Tuesday morning, and you want my latest video, that's going to be down in the description, okay? So give that a click. Going into Monday, we could see some form of bounce in a short squeeze, and that's just because these put-call ratios are so high. We're sitting at about a 1.6 on the SPY here for Friday, and we're seeing those pop up at 434 and 424. And you notice the first big calls we're starting to see is all the way up at 447. So that means that there's a lot of bearishness, and if the market does make some kind of up move, that we could see this start to squeeze and see these people start to sell their positions, and then we'll start to see calls trickle up throughout the week. A lot of the time, even in a crash, we do get bounces, and we did cut below this low, and now we have even cut below this low. So it is possible that we come down to the 200 straight away and just free fall, but most of the time we do see some kind of reconnection up in here to our moving averages that are kind of starting to pile up right around this area. And I think the easiest way to see this is to just pull up a 15-minute chart. Okay, so we are seeing that we saw that dramatic gap down just like we told you. So if you were subscribed, hopefully you caught that video and knew that there would be some kind of gap down here. It's exactly what we said. Just like we said, when this broke, we're going to see some dramatic downside. Now, since things don't always go straight down, we can start to see what's happening in front of us. And right now, we're seeing this low, and even this low producing on the MACD some momentum wanting to shift the other direction, and we see that pop up on the RSI with a nice divergence. I believe any kind of bounce that we get here is going to probably project us up into this gap fill because, like we said, 80% of the time, a gap that is left behind will be filled within 5 trading days. So what we want to look for is a bounce in order to come up and maybe fill a gap, get us out of some oversold conditions. Maybe we even go for some kind of retest, and then we see another downfall crossing this line and giving us a lower low below this level right here. And the SPY looks really weak, but the Qs here have not crossed their previous low. So this hints at me that we could see some kind of bounce, since we are holding up above our support here, into that gap fill, possibly meeting up with these moving averages coming down, and then we could see that ABC pattern play out to the downside. I wanted to show you guys that the Qs were holding up a little better before we get into the 15-minute because it looks pretty similar to the SPY. I believe that if we do get this MACD to curl over and kind of confirm our divergences on the MACD and the RSI, that we can see this probably pop up and at least give us our gap fill, if not reconnecting on the 15-minute with its 200 before then making its second plunge to the downside. One stock that's making me lean towards that bounce is Apple. Now, Apple did not cross below these prior lows, which was pretty crazy considering the market was so bearish. So now we have to see, is this going to be some kind of ABC pattern to the downside, or are we going to get that bounce? Now, the 30-minute here does look like it wants to roll over, but if that rollover does happen in the morning on Monday, we could see that tick down into this area one more time, which we've used to spring ourselves up a few times now, and give us some kind of small divergence with these lows, a small divergence on the MACD. That divergence will show itself on the RSI. We can see some kind of turn and then just hit the top of our range or even extend high enough to fill this gap right here. If Apple does end up going all the way up into its resistance zone pretty quickly, we're looking for a big crash in Apple to come later in the week. And if we switch to a 2-hour, you can see how nicely this divergence is about to set up. We have this low in here, we have this one right here, and if we are able to turn up possibly Monday and cross, we could actually see that extend all the way up into that gap fill. And if we really are squeezing, we could see us go all the way up into its prior resistance zone, possibly even filling this gap. I don't know if we will have enough steam or time to get there with all the bearishness, but it is important to be open to all scenarios. Apple right now is unconfirming this, okay? It is rejecting that confirmation on the MACD. So if this does break below this level, we could look for a test of the bottom of our support zone here, and then maybe we get a slight bounce up, and then that is what will trigger us to the downside, and Apple will head straight for its 200-day moving average in the near future. On the other hand, we are seeing Tesla, which just crossed on its MACD on the daily, leading to our overall direction being right here. It doesn't mean that we can't get a bounce. It's just as I go into the shorter time frames, we're not seeing too much with the MACD and RSI to tell us that overall momentum is slowing to the downside. The only thing we have for it is we are pretty dang oversold, and we've been oversold for a little while. But we can draw out some stuff here and see that price is starting to coil up, and maybe this could be some kind of coiling up to the upside, but it also could end up to the downside. I believe that if Apple and other stocks start to bounce, Tesla will as well. And if that happens pretty early on, we could even see Tesla go get a full retest of that trend or that channel that it was in. The bottom of its channel could get retested. I'm overall going to pay attention to what happens on its gap fill level right here. But overall, if other stuff starts to bounce, Tesla likes to move up and down pretty well. So it's kind of like Bitcoin. It likes to move pretty vigorously. So we could see this start to extend and maybe see some resistance around that gap fill. If it is a very vertical direction and a short squeeze, we could see that extend higher and go and retest that channel. I'm overall thinking that we are going to run into problems right around that 262.50 level. So I'm going to cover a stock that a lot of people ask about, and that would be Nvidia. So Nvidia, we actually noticed that there are these highs here that set up a nice big triple divergence on both the MACD and the RSI at the same time. So congratulations if you caught this trade and you played that momentum shift to the downside. You did a good job. And what we're noticing here, if I just can clear all of my stuff real quick. And now that's cleaned up, let's look at some ideas here. So what I'm seeing form here is we do have some support at this level with maybe a neckline of a possible head and shoulders forming. And what we see here is a left shoulder, head, and maybe now we are able to spring a little higher, maybe with our, we stop at our moving averages. Maybe we go up into some gap fills or something like that, maybe even all the way up in here. And then we start to see that pull down to the downside with our right shoulder being formed. Now, if that right shoulder does form and we see a break of this right here, we can see that price most likely is, with our measured move, going to go directly towards that 200-day moving average. That is where I believe Nvidia is heading in the near future. And maybe at that point, we can start to talk about another dead cat bounce or some kind of bounce from that level. If we do see some kind of downfall, say in the morning, and we start to pull back down into our actual neckline, we haven't touched it yet, we could see this MACD start to roll over. And then if that does roll back up, we can see that divergence forming here and here. And then we can see that project to the upside and see if we can go fill some gaps. Amazon is what I use to play this downfall. And what I just noticed was we had some triple divergence forming from all the way back to June 6th to now, and we saw that start to fall, so I took my risk to reward up into here, and that actually played out to the downside, so it's very nice for me. The measured move is down towards this 200, but I'm not going to play it all the way down there. I could see a bounce up to possibly get a retest, and then we plunge to the downside. And let me look at a 15-minute so you guys can see just how good this kind of looks. 15-minute, we can see some kind of wedge starting to form. Overall, we're just seeing price start to coil up and look like it wants a big move. Now, this little low here actually did not touch the bottom of our wedge that had formed, which is slightly a bullish sign that it wants to pop out to the upside. So what we could see is this MACD start to roll over and this RSI divergence start to play out. And then we could see that extend as high as the gap fill that we left behind last week. And you can see that with the measured move from just this wedge right here. Something that could project us to the upside is the falling off of the 10-year yield. This thing actually did drop off pretty significantly on Friday, and we are seeing that divergence start to form on the MACD here. Now, it doesn't prove itself on the RSI, so we don't really want to see too much downside with this. Most likely, we're going to go meet up with one of these moving averages. It's possible we go to the bottom of the channel, but I think the most likely scenario is we're going to see a few days of this falling off to go to its moving averages and then start to pop a little bit higher. The longer we stay up in this area in the unknown, the more downside we are going to see in the market. That's overall just what you need to think about when we're looking at the yields. If I switch over to TLT on the 30-minute, which is the inverse correlation to the 10-year yield, we can see that pop in TLT as we saw the 10-year yield start to back off on Friday. Now, this is looking like it wants to possibly start to roll over one more time, so we could see yields go higher and continue that crash. But we are seeing possibilities of a bounce. So if this continues to go up and those yields continue to fall back down, maybe we go and possibly even come up and fill this gap, and then we can see more downside with yields starting to go back up. Lastly, the VIX, we said once it gets above 50 and gets a closing bar, that's the hint that gave us that it's going to gap down the next day. So hopefully you were here and you got that information. Please subscribe if you do like the information that you're getting. It really helps me out. And the overall thing we said now is once we got up to here, we need to close above this 200 to get us above 20 again and really bring volatility back into this market, okay? So on Friday, we did see a slight retest like I was talking about, and then we bought back up. I still could see the VIX needing to come and meet with these moving averages down in here, and then maybe that's what starts to tick us back up to the upside, giving us that full volatility above 20, where people will really start to be shaken out of this market, and we'll see some bigger crash to the downside. The main takeaway from this video is we are crashing it and we could continue crashing, but a lot of times we don't like to go straight down. We have gaps above us that could want to be filled, and we are seeing signs in some stocks that show us that momentum to the downside is weakening. So if we can get some buyers to start to accumulate at these areas, we can see some extension to the upside that gives us some kind of bounce and then tears us back down to the downside once that is finished. That's all I got for you guys. So I hope you guys had a great weekend, and I hope you guys have all the luck in the world with this trading week coming up. Peace.